now about 4 minutes into the hour, so I want to jump right into our content for today. So my name is Tim Wilkins. I'm a part of the team here at Cheney and Associates. And for those of you that are unfamiliar with who we are or what we do, really our goal, we were founded by Steve Cheney going on 19 years ago. And really our goal is to serve churches, to come alongside them as a trusted ministry advisor and partner with churches to leverage technology and good accounting practice to make sure that your books are always in order and you get the right information at the right time. So financially, you can make the right decisions. That's why we've been on top. Our team has been working around the clock on this payroll protection program because it has such a significant impact for churches. So let's go ahead and jump in. So I saw some of you in the comments have been saying, hey, praise God, we've been funded. So now the question is, now completing the application and receiving funding, our language is that's just like getting to halftime, right? We haven't won the Super Bowl yet. We've still got another 2 quarters to go. And really the second phase of this process is the tracking of those funds, how you're using them, and then ensuring that you are able to hit that 100% or achieve maximum forgiveness of that loan to turn it into a grant. So let's jump in and we'll start running through. On the call, I do have our founder and managing partner, Mr. Steve Cheney. Steve came out of the corporate accounting world 19 years ago and literally felt called of God to start a firm to serve churches. And it's a privilege to have been on the team for a couple of years now. Steve really is a leader in our industry. For those of you that are familiar with the AICPA, he's been a national speaker, one of 3 people in the nation on that speaking circuit that were selected to speak to some of the largest accounting firms in the country. We've really been he's set up our firm to be a thought leader in cloud-based accounting and really pushing the envelope. At one time on our accounting platform, Zero, we had the largest number of faith-based nonprofits in the world, like our little firm here in Roseville, California. So it's been really neat to see as we've been faithful to serve churches and pursue the vision that God put on Steve's heart, how he's been able to bless that. So Steve, is there anything else that you want to add in there?
No, it's great to be with everyone today. I'm excited to get to update everybody and just be a part of this. Thank you for being part of the journey with us in this whole last 2.5 weeks, as well as the last 19 years. So it's been great journey, and the Lord is really blessed.
Yeah, and it truly, just the last 2.5 weeks really have been a wild ride. We were on top of this right when the Senate passed the bill, the CARES Act, and then we're following it through. It was signed on Friday by the House, then by the President, and went to the SBA. And those of you that have been kind of tracking with us know that it has been a wild ride. So thank you for your understanding and your patience as we've just been adapting to the change. I think the SBA themselves changed the application multiple times. And by the time I got to the lenders, they were also asking for different things. So it's been a ride, and we are committed to staying on top of things as they transpire, and which is what brings us to today. So if you are I'm assuming most of you have already either submitted an application or familiar, but if you're in the zone where you're just, maybe you feel like you're just jumping into this whole payroll protection program, really the highlights of it are it's for small businesses and churches qualify under 500 employees. Funding is payroll loans equal to 2.5 times your average monthly cost. And then the kicker is it can be fully forgiven. And that's what we're going to be talking about today. How do we make sure that we leverage and track and do all that we can to ensure that those monies, that 2.5 times our average monthly payroll cost, is shifted into a fully forgivable loan. let's talk about that. But before we get there, I just want to give you some key updates. These are some things that the SBA came out with just here in the last week, and that is the loan terms. So if there is a portion that's not fully forgiven, the terms on that loan have changed. Initially, it was going to be a 10-year loan at a cap of a 4% interest rate. That shifted to a 2-year loan at a 1% interest rate. Now, the good news there is there's no fees, there's no prepayment penalties. So if there is a chunk of money left over at the end that would not be forgiven, you can always just pay that back. Or, I mean, you can hang on to it, and that is really, really cheap money at a locked-in 1% interest rate. I don't know anybody currently that's offering rates like that. The $100,000 limit that we assumed initially in the language was on the total compensation package. The $100,000 limit per employee, the SBA clarified, is just related to wages. So there'd be wages, housing allowance, salary, kind of however you break that down. You can include the full retirement and insurance premium portion on top of that. They came out with a final ruling on contractors and sole proprietors. We'll talk a little bit more about what contractors and sole proprietors can do to take advantage of the PPP program. But the SBA did come out and clearly state contractors and sole proprietors are not eligible for an employer or a church to include those people in their calculation. And then finally, housing allowance. This is one that we've been really excited to see just this week. We've seen multiple loans clear and receive full funding that we included, where we included housing allowance in that number, which is really, really exciting. So if you're at a place where you haven't applied yet or you're in that process, just on Monday, we had 2 of our churches were applying through a local bank. And the local bank came back and said, we will not allow housing allowance to be included. Now, if you're in that situation, feel free to reach out to us, and we'd love to connect you with a lender. We've got a great online lending option that is allowing housing allowance to be included, right? And for many of you, that's a significant portion of your payroll liability. So those are some quick updates. Let's talk about loan forgiveness strategies. Now you'll see that in the subtext here, I did include, yes.
Hey Tim, let's do a little bit more of an update on maybe some processes that we're seeing right now with the banks,
Sure.
and especially maybe what we've seen over the last week and a half. Maybe I can jump in there for just a second.
Yeah.
So one thing that we were trying to do as a firm, we were really trying to get a national presence with a couple lenders, and obviously those lenders had literally thousands upon thousands of applications that hit literally overnight. We had one bank that we were trying to work with that had over 5,000 applications, and because they were a complete brick and mortar bank, they were trying to do everything by hand, and just really difficult. So last week, prior to that, actually today, 2 weeks ago today, a company was approved to receive online applications called Divvy, and it's Divvy. We'll get you a link to that too, but they're still to this day accepting applications. They'll accept applications all the way through June 30, 2020. And so they're processing a ton of stuff right now through our clientele, and as well as just people that are being referred to them. So just to let you know that this process has been really held up by the SBA, and you probably are getting right now your E-Tran number. If you get an E-Tran number, that means that you've really been approved for the loan. That means that the funds are going to come from the E-Tran system and be put into your bank account through the SBA, through the bank, and through into your direct account. If you're using Divvy to do that, they ask for a voided check, because they're not requiring you to be their client, which has been great. They've opened this up to anybody who applies. We actually have a link for that, and our person can post that as well to get you into their system. So it's not too late to apply for the PPP. We understand that today the SBA is issuing a ton of E-Tran numbers through Divvy, and that people who have already applied there have a potential to receive that email to let you know that that is coming. So I just wanted to sort of give that little flavor. That is like even an hour before this this webinar, that is the most up to date that we have. That the SBA and ultimately the funding was supposed to happen within about 72 hours, the approval process, and then the funding was supposed to happen maybe another 72 business hours after that. So ultimately, the approval process, though, now is going between 5 and 6 business days, and it might go a little bit longer. But what we've heard is once you receive that E-Tran number, you are pretty much guaranteed to know, no matter what you hear in the media, that you're going to get the funding from the SBA. And so hopefully today we hear a lot more praise reports of churches that have received it. We've also been helping independent contractors receive these funds. So last Friday, independent contractors were able to submit their applications, and we have been having a lot of traction from churches that have in their congregation small business owners. The pastors have been sharing the Divvy link with them, and Divvy has actually been going through this online with them over the phone to help them submit their applications. So just let you know, we're going to get into what this means a little bit later. But your independent contractors, your sole proprietors, all your small businesses in your churches are able to qualify for this loan, the PPP loan. And you can, so just amazing, just think about how, what a blessing this is for the church. It can be a blessing for every business owner in your congregation. So again, not too late. You can still apply. You can see on the link there, the chat group that David posted this link, and feel free to share that. If you're still thinking that you need to apply for the PPP loan, or you have another church friend or businesses, get it in. It's still available. So
absolutely. Absolutely. And those of you that have been following the news, I know that the initial vote got hung up in the Senate, but the president has already gone back for an additional $250 billion in funding for this program. And I mean, initial conversations were that they may go back 2 or 3 times for additional funding for this program. So just because if and when right the initial funding is dried up, we would highly recommend getting an application in. If you're a church or a sole proprietor or a contractor, because the moment more funds become available, which we're fairly confident that will happen, that you'll have that application, you'll be in the queue to receive those funds. So let's talk about, we received the funds. Now what, right? We've applied, we've received funding. How do we make sure that those funds are converted fully to a forgivable loan? So we have in here, after your books are in order. So Steve, as the CPA, as the financial expert, when we say your books are in order, what does that mean to you?
So yeah, that's a great question. We get that quite often. So books in order mean this to me, is it reconciled to the bank statements and to the payroll records? Because if you think about this, beginning with the end in mind, right? That's an old Covey saying, right? 7 habits of highly effective people begin with the end in mind. So let's begin with the end in mind. And really this entire process has been that, right? Because we didn't want to just get the Paycheck Protection Program loans and then have more debt on the books. We wanted it to be forgivable, right? That's the whole key. So beginning with the end in mind is getting this to a point of what is forgiveness look like? And how do we ascertain that? So getting your books in order mean that you have a good payroll register, right? When we receive this funding, the date that you receive the funding, the 8-week period starts. So we have 8 weeks to prove that this money is going to be spent for specific reasons. So then how do we ascertain that? How do we give substantive documents to be able to show that? Number one, the biggest thing is your payroll register, right? So if you have people furloughed right now, that's okay, because once you receive the funds, the government says, please put them back on payroll. So If you're saying, oh, we're just paying 1099 people, oh, that's a major mistake, because this is a paycheck protection program. So let's get them on paychecks. Let's get them a paycheck. Let's get a payroll register going. Payroll is also not the point that when you earned it, it's the point when you received it. So payroll is what they call a cash basis. All individuals in America are an individual tax. Their individual tax basis, or how do they report their income, is on a cash basis. So therefore, it's important as to what the actual calendar date of the paycheck that you're giving is. It's not as if like you say, oh, this is for the payroll for the last 2 weeks of March. Doesn't matter. It's when is it actually paid? When is the actual date on the paycheck? And you want that payroll to be reported in the period of that 8 weeks so that it's reported on the second quarter 941. Because this loan forgiveness that's when that payroll period is going to start, right? It's going to be from an 8-week period, and let's just assume it's in the month of April. 8 weeks out, it'll be on the 941 for the second quarter of 2020, which is from April 1st to June 30. So big thing, you got to make sure that you have your payroll in order. That's big. And then how does that payroll reconcile to the bank statements for your bank for April, May, June, right? Did the payroll actually come out of the account? So there's going to be a testing process for this, right? And if you have those two things in order, and there's some other rules that Tim's going to go over, I mean, you are greatly there. Now, there's other things that you need to have, like, right, interest on your debt, like your mortgage payment or rent, or like retirement expense or medical expenses, utilities, right? So you want to make sure that the payments that you're going for are actually paid in that 8-week period. Not that you're accruing it, but that you're paying it, right? Doesn't matter if it's the interest for the prior month of your mortgage payment or the rent. It's a matter of when you paid it. So make sure that that comes out of your checking account and that your bank statement is reconciled, right? Don't say like, oh, we haven't done a bank reconciliation in 5 months. Massive problem. If you're a pastor in your church, you should understand this, that the accounting department should be a reporting department. If they're not producing reports to you, there's a problem, right? Whether or not it's the PPP loan or whether it's a board meeting coming up, if you're not getting financial reports, there's an issue. You need to drill into it. And that's the kind of stuff that we help our companies with, our churches and our faith-based organizations that we serve. That is what it needs to be in order. If your accounting department isn't giving you this information, you understand something. You're not in order. Your books are not in order. So that's the big thing. So getting that in order for this loan is job one, because at the end of it, at the end of that 8 weeks, at the end of June 30, 2020, we have another 60 days, 2 months, to prove to the bank that we actually paid this out. So right now has been the sense of urgency. Get the loan application in, get the money in the bank, right? We sort of have a little bit of a reprieve, but not a reprieve that we can be lackadaisical. We have a big job to do of making sure everything's in order before the end of the 8 weeks. So that then the next 60 days, which is another, let's just say 8 weeks, you can then prove that you have spent the money, and then it can be 100% forgiven. So
Yep, that's great. So that's what we're talking about when we say books aren't in order. So now let's talk about we've identified 5 steps that you can take right now to ensure that you are able to maximize your loan forgiveness. And I think it's important to note that the SBA hasn't clarified specifically what they will request. Now, if history repeats itself, it's due to change, and depending on the lender you're working with, they may require or request additional information. But here are 5 things you can do now that we're confident will be good proactive steps that you can take. So the first one would be a simple way to make sure that these funds are segregated and tracked correctly would be to just set up a separate checking account for these funds, because precise tracking of the usage of these funds is absolutely vital. Now, you'll still want to pay your payroll liabilities. You'll still want to pay your mortgage payments. You'll still want to make your retirement payments out of your general operating account. So what we're not suggesting is you set up a separate account and then go to your payroll company and change where money's being pulled from. Absolutely not. And a big part of that is, for example, with your payroll liability, for many of you, what you will not be able to do is just say it's a one-to-one, right? My total payroll cost is completely applicable for the forgiveness amount. For many of you, that's going to be a different number, right? For example, if we're going to be transferring an amount over to the general checking to cover the payroll cost for a specific payroll run, one of the costs that will not be applicable for forgiveness is the employer Social Security and Medicare cost. There's also some considerations, we'll talk about this in a little bit, of those over $100,000, right? You're going to need to be really careful with how those monies are tracked, because that could put your full forgiveness in jeopardy if it's not done appropriately. So the first thing is setting up a separate bank account, or at least having a mechanism in place where you can track very specifically like Dave Ramsey talks about, giving every dollar a name, right? It's the idea of every dollar that I'm using for the payroll, every payroll protection loan dollar, that I've got a name on it, and I'm going to be able to ensure that I'm able to hit that hit that 100%, right? So my qualifying expenses meet or exceed the total loan amount.
One thing too that I would bring about that, let me say one thing about the prior slide about the separate bank account. So as we're not in, and this is one thing you said is still pay all your bills out of your operating checking account, right? But you're sort of, as you utilize those funds from like a savings account or a money market account, just transfer and release that money to cover those costs, right? So again, it's not, the government's not going to say, oh, you combine all this into one bank account, right? And that's all you can put it in, right? They're not saying that. Now, I know the clients that are going to Divvy, we've set it up so that the operating account will be the one that is going to receive the funds through the direct deposit, okay? Or your bank, right? Your local bank will say, which account do you want these put in? What we're saying is, if you have a separate bank account, put it over there. It'll be easier for you to just sort of do a release of those funds as you utilize them. So if you pay payroll, let's say the next payroll, April 30th or whatever that would be, and you spend $15,000, then release $15,000 to cover that payroll. If you pay the medical, release that, right? So there's some bigger tests that are coming up. The one that I'm thinking of is the 75% rule that you least spend on payroll costs. And so, but that release of separate funds will help you sort of have a peace of mind, let's just say. So.
Yeah, absolutely. And that's really what this is about, is how do we equip you with the right information to give you that peace of mind that, yes, we are doing everything in our power to be good stewards of these funds that we've been blessed with. So that's number one. Let's talk about number two. So this one is going to be real important.
Hey, Tim. I think Tim froze up. So let me take over here for just a little bit. He's sharing his screen. Give us just a second to get this back up and going. I'm going to share my screen here. So give me just a second to get this back up and going here. And we'll get to where Tim was talking about. Looks like we lost him there for a second. Hopefully you guys can hear me. So our second sort of area that you should do is managing your head count. So obviously you will need to calculate your head count should be, right? The methods to do this would be calculating what the full-time equivalent is, and we'll talk about what full-time equivalent means here in just a second. But the full-time equivalent is
Sorry about that, Steve. Can you hear me now?
yeah.
Not sure what happened there. I got booted off.
No problem. I think I tried to share my screen. Are you sharing your screen now?
Sorry about that. Yes, I just popped that back up. Can you see that?
Yeah, I can see your screen now.
Perfect. Okay.
So I just started to talk about the full-time equivalent. So why don't you just head into there?
Perfect. So the first thing to do is determine the methodology that's going to give you the best result. And as we've said before, I feel like I've been a bit of a broken record. I almost feel like a politician or a lawyer, like qualifying my statements. But the qualification here is this is subject to change. This is the best information as we now know. And as it stands now, there's been two criteria put forth to determine your full-time employee headcount. So the first one is taking February 15th to June 30, 2019, and comparing that to the same time period this year. The second method given in method number 2 is looking at the beginning of this year, right? From January 1st, 2020 to February 29th, 2020. And we're gonna take that, and that's gonna give us the denominator, right? The bottom number on our fraction. Now, to get the top number, what we're going to divide by to get that calculation is we're going to take February 15th. So that's why on many of the applications that you filled out, they've asked you, what is your head count as of 2/15/2020? So what we're going to do is look and say, I'm going to take either method A or method B. Which one is going to give me a more favorable number? And then I'm going to make a projection, right? Based on that number, what does my head count need to be as of June 30 so that I can fulfill 100% of this test? So what kind of the phrase we've been using is, well, manage your number, right? They've given you the test. You've been given the answer key. Now study to the test. Right. So even though we're not obviously at June 30, we can begin running some scenarios. And for some of us, what that may look like is you need to go and hire somebody. I believe Steve and I were talking before the call. Steve has generously offered, if you need an employee to boost your headcount, Steve will gladly go on your payroll. He's a giver, right? So if you do need to make a strategic hire to get you over that number, make sure you're doing that. Week 4, week 5, week 6. You're looking at where your numbers sit, and then you can run some calculations to make sure you're able to achieve that.
Let's talk about what an FTE means, Tim.
Yep. Full-time
equivalent. What is that? How would you sort of calculate that? So the way I always recommend is that from that time frame that you're looking at, and it's on a per month average. Okay, it's not like you add up all the months and then, oh, I had 150 full-time equivalent. No, it's per average month, right? So if you had 4 employees, but they were part-time people, and let's say each person works an average of 10 hours per week. So you would take employee 1 at 10, employee 2 at 10, employee 3 at 10, employee 4 at 10. That's 40 hours. And that's one equivalent full-time person, right? So you have to figure out, what does this full-time equivalent mean, right? Because you could have a head count. And that was sort of misleading on the application, because the application said, how many job descriptions do you have? Well, why does the government ask that question? because the government wants to go on the news media and they say, we created 1 million jobs, right? Now that might be a part-time person, right? But they want to talk about this. That's more media and getting their news out, right? So that was a little confusing. So when you come to this calculation, the FTE is the full-time equivalent. So a full-time equivalent person works 2,080 hours in a year, okay? Or 40 hours per week, 52 hours a week. Now you might say, oh, I work a whole bunch more hours than that, right? Or like if you're a pastor or self-employed person, you're like, oh my goodness, I'm working 55, 60-hour weeks. Guess what? For this calculation, it's only the 2080. So you have to limit it on a salaried person to that.
Yeah, and that's going to be really important. And we're looking to the SBA to release further guidance on specifically how they want that calculated and how we're going to substantiate that. But that goes back to what Steve was talking about at the very beginning of making sure your books are in order, making sure you have a good payroll register where those things are clearly outlined, right? So maybe a specific example would be when we're converting clients onto our full service where we'll be running payroll for them. What I see happen a lot is that you'll have maybe let's say a women's ministry director or a missions ministry director. And what oftentimes how that person will be set up is they'll say, we're going to give, Joe Smith a stipend of $500 a month for the duties of missions director. Well, in the payroll system, Joe Smith will then be set up as a full-time employee. And so on the payroll register, if he's getting paid per week or getting paid every other week, oftentimes what will show up is you'll have that person on the payroll register. It shows that they're working 80 hours a week. So just a key note is pay really close attention to your payroll register. And those things are very easy to adjust. So you can go in there and say, nah, Joe Smith doesn't work an average of 8 hours a day for 5 days a week. He works an average of, right? And just come up, what is that number, right? What is that number? Because that's going to make calculating your FTE on the back end a lot easier. If right now, and you should already be doing that because a lot of your workers' comp audits are going to be asking for those numbers. So that's just a really easy, small tweak to make now that will pay dividends in the future.
Now, what's the method between 1 and 2? What's the rationale there? The rationale in my mind, the way I think about that is you get to choose, obviously, which one's better for you in the calculator, right? And so they're saying that you get to choose one versus the other. I look at sometimes in a church, your FTE might be down, right, in the summer months, right? Because you might not have as many people, activities, right? Easter, we sort of spike, although this year's a little bit different, but we might have a little spike different. So it's important to have both calculations done. Now, if you're a church plant and you might not have any FTE for February through June of 2019, so you have to use January through February 2020. Right. So again, it's another takeaway from this slide is it's whatever is advantageous for the recipient of the loan. They can pick and choose which one's the best. So
absolutely. So we're coming up on we're at 11:38 here. We've got 3 more. I'm going to move fairly quickly through these last 3 slides. That way we can. I do see we've got quite a few questions coming in, so I want to make sure we're able to jump into some Q&A there at the end. So number 3, the 75% rule, right? SBA guidelines mandate 75% of PPP funds go toward qualifying payroll expenses, right? So we've gone over quite a bit in previous webinars, and there's a lot of literature out there to say what is a qualifying payroll expense. I think the big takeaway here is, making sure you're hitting that at least 75% number, right? That's really, really important that you're getting to at least 75% of these funds are going toward payroll and payroll expenses. A key point here is that only the first $100,000 annualized per employee can be counted toward that 75%. So if you have people that are making over $100,000 in wages, salaries, housing allowance, etc., only their first, and it has to be annualized out, but only the first $100,000 can be applied toward that 75%. So when you're making those calculations, when you're getting ready to transfer over, money from kind of that release of restriction, right, to cover those payroll costs, keep in mind that there's going to be some things that don't apply, right? Your employer, Social Security and Medicare liability, as well as anyone who's over that $100,000 mark. Only the first chunk of that will be applicable. And that's something that I'm fairly confident they're going to be looking at pretty closely. Additionally, the SBA had some further guidelines to say if a person is compensated under $100,000, their total compensation can't decrease by more than 25%. So what they're wanting to see here is, okay, yeah, we brought these people back on staff, we got our head count up, but we cut everybody's pay in half, and then gave out bonuses to the executives. So all of these things are just being put in place to make sure that the funds are going toward truly supporting the employee. Quickly, we'll go through the last two. This one, document, and then do some more documentation. Our recommendation would be, after you've set up that separate account or a separate way of tracking those funds, create a folder. We love, we're on the Google Suite with our company. So have a shared online folder where you can begin after each payroll run, after you pay the mortgage or you make a rent payment, after you make a utility payment, make sure you're getting those documents, hard copies of those documents or PDFs, and uploading them to that folder for that 8-week period. So the more you can do now on the documentation side, it's going to make your lives so much easier on the back end. Steve, when we were initially chatting, you had some comments about retirement contributions, right? In making sure those are made in a timely fashion. Do you want to elaborate on that?
Yeah. So sometimes organizations do retirement payments sort of at the end of the year, catch them up, right? Especially for self-employed people. But obviously this 8-week period, this is a cash basis. Remember we talked about cash basis. So you got to make sure you make those payments, get them out. That's the employer portion, not the employee portion. Employee portion is part of wages. The employer portion is what you want to consider. So if you're going to do additional, like a match, let's say it's 4% match, like the Brightline, a Safe Harbor, that would be something similar to that. If there's any profit sharing, make sure that gets out. So you want to make sure cash basis is taken care of.
Yeah, and I think on that note, I just think of some of our churches who are renting or in a lease situation that's non-traditional, right? Maybe you're going through a school, you're going through a community center where maybe your lease you're paying in quarterly installments, or you are there isn't really like a good receipting system. So my recommendation there is be proactive, reach out to, because I've been talking with some folks even last week, where they're like, nope, the school we're renting from or the theater we're renting out, even though we're not meeting, they've told us if we want to have that spot, when this blows over, like we still got to pay our rent. So our recommendation there is be really proactive with that, and even have them create up a little receipt for those monthly expenditures, because it's going to be focused very particularly on the 8 weeks after funding is received.
And I think also on that too, as just a planning opportunity, remember this is number one is I would keep this that I received the PPP program to confidential to myself. Because number two, you want to save that money a lot for payroll. Okay. And maybe your landlord is going to defer a month's rent. But you don't want to tell them like, oh, I got the PPP program, because they'll know that can be applied towards rent. And also beyond the 8 weeks, if you need to front load a little bit of payroll, remember payroll is a cash basis. So you could put it in the 8 weeks to cover some of that cost, right? You can move up maybe if you're paid on July 1st, because if you're a pastor, and a lot of pastors like to get paid on July 1st, or whatever, move that to June 30th so we can get that payroll in this period to make sure the calculation transpires. But again, make sure you're taking care of your employees in this regard. I mean, we're talking to a lot of church lenders right now saying, you know what, only go interest only, right? Even though you can pay it, so we can save that principal. So there's things that you need to strategize beyond just sort of think of the cash flow beyond the 8 weeks, right? And how you can flow with that.
Yeah, it's good. That's good. Lastly, number 5. This one is, you know, a bit of a almost goes without saying, right? But let's be proactive. So contacting your lender for specific guidance. Yesterday, I reached out to one of the lenders we're working with, Divvy, and you know they pretty much said we're in limbo, right? We're waiting for the SBA to release guidelines. But I would put in a call, because what they said is, hey, we've got your name on a list, and the minute we know what the forgiveness process is going to look like, we'll send out a communication. So I'd reach out to your local lender, whoever you went through, and ask them, hey, can you give me any you know advanced warning, so that we can be prepared as possible on the forgiveness side of things. You can always go to sba.gov. That's where you know you'll see any releases that the Small Business Association is coming out with. We also recommend, as part of that documentation process, keeping a spreadsheet. We're actually going to be updating our calculator and making that available to everyone on this call and for download on our website. Excuse me. Where not only if you haven't applied for the loan yet, you can use that to calculate what your average monthly payroll cost is, as well as what your loan amount is going to be. But we're going to be adding some tabs on there to help you keep track of these things, help you manage. How do I come up with what is my qualifying expenses on the payroll side, and just making sure you can plug that top line loan number in there, and you're managing toward it and trending in the right direction. Additionally, we'd say, hey, if you know independent contractors that are in your congregation, encourage them to apply, right? Get into the queue, because even if the first round, or even if and when, right, that first round of funding is used up, more than likely there's going to be additional funding on its heels. So it's better to get in the queue now than to wait. So to do that, David's been sharing this link periodically, but you can send folks to this CARES link, where we've kind of curated some high level, just kind of top 50,000 foot view information. You can also access a webinar, and as I mentioned, we'll be making that calculator available. So if you haven't applied, there's still time. If there's if you know minister friends that haven't applied, there's still time. Sole proprietors, contractors, absolutely, there's still time to get in on this incredible benefit. So why don't we get into some questions? I can see they've been rolling in here. So Steve, if you're ready, I'll just start cruising through here. I'm going to start throwing some at you, and we'll start with the top one. This one got 19 upvotes. So this one says, is it a good idea to transfer PPP funds into a separate account for more accurate paper trail to prove fund usage?
I live in a world of absolutes, so I definitely like that. Is it necessary? No, it's not necessary, but it's a good way to know that, and it forces yourself to do it.
Yep, great. Yeah, and we talked a little bit about that at the very beginning, so maybe if you jumped on a little bit later, we're going to be posting the recording, so you can always jump on and hear the full discussion on that. Another question that got a lot of upvotes was, can end of year bonuses be paid now to staff and count toward the payroll costs for that 8-week period? So is it a good idea to, let's say we give Christmas bonuses, is it a good idea to front load any of those, because those monies were calculated in our 2019, right, payroll costs when we were figuring out what our monthly payroll cost is?
The answer to that question is yes, but it depends. It always depends, right? That's my favorite answer. It depends. So the answer is yes, it can. Um, but you have to do the FTE calculation. You got to make sure that not going over the 100,000. If somebody goes over the 100,000, you're going to lose that opportunity for that calculation of that portion, right? So you got to sort of figure that out. It's going to play. You got to play with the numbers to make it work. So
yeah, absolutely. Another question similar to the payroll side. Our staff did not get a raise this fiscal year. Can I use part of the 25% to give a bonus to the staff? I know I can cover the 75% without any problem. We have no interest payments and our utilities will be at a minimum because of the lockdown. So at this point, most of the 25% will be returned.
well, you don't want to return anything. So like, do not return anything, in my opinion. But the answer to that is yes, you can. Again, with the FTE calculation, you got to make sure you obey that rule. Don't go over the $100,000, limit. If somebody's getting an annual salary of 100,000 or more, that's going to come into play. So again, keep that into mind. But yeah, you can use it for bonuses.
Yeah, and maybe we weren't clear on this. So you could use the whole 100 on payroll cost.
Yeah.
Right. So it's not that you can only use 75. The specific guidance is that you have to use at least 75% of the payroll protection money on payroll related expenses, and then you can use the 25 on the other qualifying expenses, which we've got a question: what's included in utility costs? So that's going to be all of your general utilities. One question here, Steve: would you include a phone bill in your utility cost, or would you exclude that?
Well, I would if I needed it. I think ultimately utility costs, in the way I've read it, is really like electric, gas, right? That kind of utility. But telephone, the cable bill, I've been hearing on the news that they're telling, utility companies that provide cable that, hey, if you cannot shut off people's cable during this time in certain jurisdiction areas. So it depends on really the auditor that you're looking at. And just to let you know, I don't think any church is going to be audited on this. I know that was a question. There is a solicitor general that will be sort of looking through it, but I think they're going to take a random approach, and it will be, I don't think the government has the capacity to audit every church. So
yeah, something that a question I've seen come in a couple different formats is, I've applied with a major bank 10 days ago. I have confirmation that we're in the queue, but I haven't submitted documentation. Can I apply with another bank? What should I do?
Well, there's going to be a question. So like when people go through the Divvy application, there's a question: have you applied with another bank? Yes or no? Okay. So at a certain point in time, you're going to have to tell one of the banks to not process your application. So that's a sticky wicket, to be honest with you. What do I do? Because it's the bird in one hand versus, the two that you maybe could get in the bush, right? So that's a hard one. I would really, if you're waiting 10 days for a bank right now to process, I'd be like, hey, seriously, how serious are you guys going to be about doing this for me? If not, I would jump with Divvy, because it's all online. So this is the process for Divvy. When you submit your application, it goes two directions. It goes, one, to Cross River Bank, they're testing it, and it goes two, to the SBA immediate submission. So there's two avenues that happen at the same time. So you're sort of getting the best of both worlds. That's if the SBA site doesn't go down. That's if the SBA site can handle it.
Which it was down for what, most of the day yesterday?
Yeah. I mean, they received more applications in the last really 7 days than they've received, I think, in the last 10 years. I want to say something like that. It's ridiculous. I heard on the news. So you could just imagine the amount of work that those poor people have right now, and the importance of what they're doing. So again, a little bit of patience, but I've had this situation with a local banker. They were dragging their feet. Then they contacted them and said, you know what, we filled our quota. So then the company jumped into Divvy last Thursday. And I don't know how this happened, but they got approval yesterday afternoon. They got their E-Train number. I was like, how'd that happen? But it did. So,
Yep. A couple quick ones. What kind of paperwork will be required to achieve forgiveness? That hasn't been clarified yet. We assume it'll be some sort of application process similar to the one to receive the loan, but that has yet to be clarified.
So with our clientele, we already know pretty much what we're requesting, and it was just like when we started with the PPP loan. We asked for 10 items, and we only needed 4 of them, right? So what we did today was we gave you sort of a greater list. Who knows? But I can guarantee your payroll register is going to be one. Your second quarter 941 is going to be one. Your bank statements is going to be one. And maybe some interest or statements for loans or rent or utilities are going to be acquired. But the big things are payroll registers, 941 for second quarter, and then your bank recs, your bank statements. Clearly, those 3 things for sure will be required.
Yeah. This is a good question. Given that church is not allowed to meet, we have office staff that have been laid off. Can they be paid once funding is received, even if they're not actually coming to work due to the lack of work here in the office till services resume?
That is a great question, and that's exactly what the government wants you to do with these funds.
Yep.
Because, and by the way, too, what's really a thing to think about is churches don't qualify for unemployment insurance, especially in California, I know of, but in most states they don't, because they don't get to pay into it at the federal level. And so this is a great opportunity for you to bless your staff, to have continuity of, a team, and yes, make that up. So absolutely.
Yeah, and there were multiple questions about that, of like just with different iterations of, hey, we've got a child care center or a daycare that's been shut down. Now it'd be there's a portion of that in June where it would be shut down anyway. How should we use that? And I think the same logic would apply.
Okay.
Let's see. Let me find because a lot of these we've answered here. Our bank is moving very slowly in the application process. Can we apply through Divvy 2? We talked about that. However, whichever one you decide to go with, you will want to make sure you retract your application from the other. Is the 8-week period from the time we are told we're approved or the date we signed the loan papers?
The way I understand that is the date the money is in your actual bank account and it's free to use. So that's the way we understand. When funds are available, the 8-week process is started. Now, we were told originally that it was like a period between February 15, June of 2020 to June 30, 2020. You could sort of pick an 8-week period. That is not the case anymore. It is when you receive the funds.
Great. So this one has been coming in. It's a kind of a couple different variations, but what about prepayments? Prepayments of insurance costs, right? We could pay out the full year premium, prepayments of retirement contributions. Let's say it's a set amount. How can we, or are prepayments available to be included in this forgiveness amount?
So there's on the retirement side, as long as it is calculated to the point of what a person has earned in salary, I think you're safe to do that. Or if there's a calculation based upon earnings, that would be fine. But on the other side of that coin, I think I would rather prepay payroll than benefits, because if they ever come back to you and audit you and say, whoa, those were for a different period, then that's fine. Now, payroll is truly cash basis. So if you paid an employee, then they're not gonna change that, because it doesn't matter when they earned it or if it's for future work. It's when you pay it.
Yep.
That's when the employee is taxable. So I think that's the safer move in that regard, and more auditable, like in a protection of an audit, than prepaying like utility bills or prepaying that, because they're gonna be like, no, that was for future cost. We want it now.
Another question that's come in a couple different forms is, again, going back to this FTE question. When you calculate FTE, how do you do that?
It's really, I mean, to get a little bit more specific, it's 173.33 hours in a month, I believe is what it is on a salaried person. So you just calculate how many hours or how many business days a salaried person work, which is technically, let's just say 8 hours per day. How many business days in a month divided by that amount gets you your full-time equivalent. Do you have part-time people? How many hours did they work in a month, right? Divided by the 173. So you might have a person who's a 0.5, right? But another person is a 0.5. Well, those add up to one full-time equivalent, right? It's the same exact thing with the quarter. 4 people that work quarter time, they add up to one full-time equivalent. So in this regard, it's not the head count that we did on the application, it's the full-time equivalent. So you could have, let's say, 2 part-time people who resign, you hire a full-time person to cover, right? And your payroll cost is equal. Well, then the full-time equivalent would be 1-to-1 because you had 2 part-time people to 1 full-time. Same exact thing. It's 1-to-1.
Yep. Well, we're coming up right here on 12. I want to get one more question in.
Okay.
This is one that I've received multiple times, via email, and it's come up here a couple of times. Talk about back pay, right? I've got a pastor who, they're a church plant, and they, because of cash flow over the last 2 months, the pastor hasn't received any salary, right? And so can we use these funds for back pay? Even do the same thing with somebody that we had laid off or we furloughed. Can we use these funds to catch them up?
Absolutely. That's what the whole point of this is about, is getting people back on the payroll. That's what the government wants to do.
Yep. Wonderful. Well, thank you so much for joining us. You can always follow the link that's been posted there a couple of times, and I'll even post it again here. So if you have any questions you would like to get more information about how to apply, what the application process looks like, how you might be able to apply through Divvy, following this link is going to be the best way to go. It's an automated response. If there's something on there that didn't quite get answered, you can always email us at info@cheneyassociates.com. Please know that we're doing our best to respond to requests as soon as they as they come in. I can tell you right now, there's 96 other questions that we didn't get to. I mean, we probably covered 20 of them, but the volume has been pretty overwhelming. So if you have a question that didn't get answered, I would encourage you to maybe watch through the video. We probably covered it in some way, shape, or form. If it didn't get answered, we'd love to definitely shoot us a note, and we'll get to as many of those as we can. They're at info@cheneyassociates.com. We will be making, I've seen a couple questions come through. When will the video be available? As soon as we can get done rendering and we can get that up onto YouTube, that's where it'll be. I'll also be sending out a recap email to everybody that was on the call with more information. We're working on the calculator. It's in process. Know that if you've downloaded the calculator previously, you can always just go get a fresh updated copy of that. But again, thank you for joining us. It's our goal to get the right information to the right people at the right time so that they can make the right decision, and ultimately come alongside you as a trusted ministry advisor. These are unprecedented times, and I believe that God is going to do unprecedented things through the church's response to this crisis. So yes. Thank you for allowing us to be with you. It's truly been an honor, and we'll have this video up as soon as we can. Anything else, Steve?
Yeah, I'd just like to say one thing. During this time, let's just remember to pray for our leadership of our nation. They need our help. We also need to pray for the poor people at the SBA department. We need to lay hands. I know some people want to lay hands on these people right now, but I'm just saying, like, right now we just need to have some patience. And I wake up immediately running to the email. and looking and saying like, what's going on, what's going on, what's going on. Sort of like the person at the old commercial, the Mervyn's commercial, open, 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 right? And that probably shows my age. But anyways, I just say like to you, we're praying for you at Training Associates. We want to be a support to you to help you. This isn't just about us getting more clients. To be honest with you, we don't need more clients. We have plenty of work to do. But we are willing to help the local church get the resources that they need. And that's what we're about. So we thank you for your patience. We thank you because, again, we're working with government agencies here as well as bankers, and there's no sense of urgency with them. But we just want to believe that they're doing what's best. And whether you're a Democrat or Republican, it really, at this point right now, we just want to help the clients in our local churches get through this. So again, reach out to us, share this video. It's being recorded. It's on our YouTube channel as well. And we'll continue to give you updates like this. We have another one of these on Friday that we're doing, as well as there's some other type of programs that are available. I'll whet their appetite a little bit for the people who stayed. We're going to be doing some stuff on that as well for additional funding that churches are able to get. Yep. And it's important to know that. But again, we're here to serve you. Thank you very much, Tim and David, for running this thing and putting it together.
All right. Thanks, everybody.
Bye-bye.